record on this computer. So welcome to today's Fork Friday review of the week, major week coming up next week in the markets, and we'll go through some of what that means. So I don't do this every Friday. I call it Fork Friday because it's around the Harmonic scanner and the pitchforks, which I've been doing since May 2018. Once I found it, after I've been through a few strategies, then I focused on this, which has served me very well. So I'm just going to start sharing screen, and I haven't put this live on. I haven't put it live on YouTube. Never mind. I'll load the video later. So let me just get rid of that. So if we come over to the Harmonic scanner, this is where we start. And the main feed for the Harmonic scanner, you can take any of these brokers down here. It doesn't matter which one. It's not dependent on which broker you're using. I've got a Pepperstone account, and the main one I've gone back to is JFEX because it gives me leverage of 1 to 500. But you can take any of these. We start with Trader's Way usually because it's the main feed for the Harmonic scanner. This is a Harmonic scan. And we start with a 1 hour time frame analysis. So we are what's called intraday traders. We're taking a 1 hour time frame analysis, but we're coming down to the 1 minute for our entries because it's working on the 1 minute. It's the same pattern across every time frame, but working on the 1 minute, we're right up like looking at the wrinkles in the chart, and it enables us to work with a 10 pip stop loss, sometimes 15 pips. And that means you have to lose 50 trades in a row to blow an account. And that's what we like about it at 2% risk. So it's an extremely powerful strategy. Extremely powerful strategy. And someone on an hourly time frame will be working on, say, a 50 pip stop loss. And they'd have to work 5 times as hard as us to make the same profit entering on the 1 minute. So we look at scans on the hourly time frame, and we look at the C to D leg. C to D, it's a 5-point reversal pattern. They're different names: shark, butterfly, bat, Gartley, cipher. Shark is a slightly different one. Please ask any questions. I'll stop and look at the chat. So shark's slightly different in where we enter, but we're going to go over some of the actual trades, and then we can come back and look at some more of this. But just to give you the basic rules, C to D leg must be a minimum of 80 pips. Now you'll see here it says 1,788. Discount that last digit to the right of the decimal point because that's called a pipette. So this is actually 178 pips. Now, why do we work to a minimum of 80 pips? Because we put a pitchfork on, which basically is one of these, this little symbol up here, top left, and we put it on XCD, and it's really a lazy man's trend lines because it's got something called Fibonacci built into it, which makes it highly aggressive and accurate. A trend line's a bit more like a zone of a pip either side, whereas with a pitchfork, once you've put it on, if you put it on accurately, it's good to go for forever. And we've traded pitchforks. You don't have to look at support and resistance. It's actually mathematically based support and resistance, and that's what a trend line is. So this whole concept was created by Christopher Terry, the founder of the Educational Institute, whose software systems and tools we use. And this 5-point reversal scan is also based on Fibonacci. So you've got an extremely powerful system coupled with a very small stop loss, the reason it's 80 pips is because each leg of the pitchfork, if it's 20 pips and you're working to a 10 pip stop loss, you've then got you can see visually very clearly and simply when you're in a trade. It gives you a lot of confidence to see exactly how many pips you can wring out of your trade or when to get out of the trade. And it's giving you a 2-to-1 risk to reward. So it's one of the highest risk to reward ratios out of all the strategies. And it's it's very effective. Pitchforks generally are about 70% successful. So you might say, oh, well, some people are getting 94, 95%. Well, some weeks we have better weeks, some weeks we have worse weeks, but overall, what we work to, and you'll find this all on channel 20. Chance Gonham is the person who's taught us this strategy. A young man of only 23. He's been doing it for 6 years, since the company was under 1,000 people, and he was an $8 an hour fry cook from Midtown, Illinois, farmer's boy, and just fabulous person. And you know, he's brought this strategy to us, and he's now, you know, he's probably not multi-million dollar, but he is highly successful, and he's one of the top educators. So it's well worth learning. Was there anything else I was going to say about what he says about the strategy? Yes, we work. If you watch his first 4 videos under his favorited sessions, and please message me or Connor. I'll just unplug my phone. For some reason I plugged it into the computer to charge it. He's taught us. Sorry, I've forgotten what I was going to say. He's taught us an awful lot, and yes, we work. So he's got a how to compound your account. So the first 4 videos, they're not in sequential order. They got muddled up and they can't rearrange them back again under his favorited sessions. Feel free to message me or Connor. Any of us in the Pitchforks messenger chat will help you. We work to 9% a week, so we're working to 25 pips a day, 9% a week. That's 33% a month, 100% a quarter, 400% a year. And we just go at the beginning. It seems very painful because you're just flatlining. You've got a small account. You're making pennies or cents or a couple of dollars. But if you get the process down, it's not to do with the amount of money, because if you get the process down and get confident pressing that button and seeing winning trades, then you'll find that you go up from that X, you know, up the Y curve, and you'll get that compounding working, you know, really strongly in your favor, while staying very safe on your stop losses. And we don't move stop losses either, you know, which is another emotional thing people struggle with. It's like the rollover on the HFX. Oh, shall I move it? You know, well, we work to major levels. The market works to major levels. We don't move stop losses. We might sometimes increase it a little to cover a major level, and I'll show you some of those on our entries. But we don't move stop losses, because that's often what blows people's accounts for them. We don't over leverage. We always stick religiously to that 2%, and we use myfxbook.com. The position lot size calculator will work it out for you. And again, ask in our chat or message us privately, and we'll all help you. So let's come over and look at some trades. We'll start. I'll start by saying we follow the same process every day, which is to look at forexfactory.com. So come over here, set it to your local time. Up here, top right. I'm on Paris time. I'm over here in France, so it's GMT +1. Save the settings, and when you first come onto here, you will find, come back to the home page, you will find that this the time session zones, which is very important on what pairs you're going to trade, depending on your free time each day when you're trading. I'll come on to that in a minute, but you'll find that time session down at the bottom, and you just keep clicking the arrow. It says top of page. Keep clicking the arrow, keep it at the top, and then you can see exactly where you're trading, and that does affect pairs and movements and which ones you should look at, or it's preferable. You can look at anything, but we trade about 24 to 32 pairs. We trade any pair. The only time we do not trade is UK time. Its close of market would be 11 p.m. to 1 a.m. Because at the close of market any day, you get a lot of spreads. The brokers are all settling up, and then it can open with quite a spread, the difference between the buy and sell, and you could find you're a lot of pips out. And it's then the Sydney session. So we start this at 1 a.m. We start at the beginning of, sorry, it's 12 a.m. time change. Always muddles me up. So time change, Tokyo will be at midnight. So it was at 2. I get a little bit muddled up when the clocks change. So we can trade this anywhere in the world, any pair, for 22 hours a day, and we can trade using the same pitchfork going back 300 or 400 days. So that's what's so powerful. So even if the scanner isn't working, even if you haven't got any signals to take, you can find a trade off an old pitchfork. So once we've looked at the news, and you can see that today what we had was just some Canadian news and US dollar. I didn't realize that was there actually. US dollar news. This is Paris time, so knock an hour off. That's just happened an hour and 20 minutes ago. And then next week, one of the heaviest weeks ever in the industry. Now, I've not traded a presidential election before. And if you haven't traded one before, then what the top educators tell us is please go on demo, because what you're seeing at the moment is a lot of what they call accumulation, ranging, consolidation. Pairs aren't making big breakout moves because of the whole market is made up of people like us and COVID, and we've just gone into lockdown as of midnight last night. The UK is thinking about lockdown. You've got the end of furlough tomorrow in the UK, etc., etc. And the same thing happening in the States, an awful lot of uncertainty. So the markets are reflecting that. And then after the election, the end of next week, you will see possibly, there's an awful lot of political information. It's called fundamental news analysis, working off. Technical is when we look at the charts. This is fundamental, and you get sentimental. So politics is fundamental, and you will get, after the election, maybe some riots if the Democrats win. That's apparently what the Republicans, some of them have been saying. I mean, the best thing to do is stay away from commenting on any politics, as we know. But this is why next week's going to be one of the trickiest weeks for any of us to trade. So if it's your first election, go on to demo and use it to practice, and go through some of the videos on channel 20 under the favorites section. So we've got not only the election here, but we have next week about 5 other major news announcements. So we've got the Japanese on holiday on Tuesday. We've got New Zealand unemployment red flag news on the Tuesday. We've got Australian bank news on the Tuesday. So that's the Asian pairs affected, or all three Asian pairs, which is Australian dollar, New Zealand dollar, and Japanese yen, all affected on Tuesday. And the election. And then Wednesday, we've got more USD. Don't know what that is, something to do with manufacturing, I presume, USD news. The markets will be reacting to the election. Thursday, we've got GBP, which is London session, obviously, GBP, Euro, and CHF, which is the Swiss franc. The H is Helvetica for Switzerland, and I can't remember what the C is, something Helvetica Federation. That's why it's called the CHF, the CHF. So those are your three London pairs. So we've got monetary policy statements following the end of furlough on Saturday, and the new system is going to be less generous and pay out 60%, not 80%. And obviously companies are affected. People are very worried coming up to Christmas, and all that will be reflected in the market. Then we've also on the same day FOMEC, which is I think it's World Bank's meeting. So major banking statement, red flag news for the US following the election, and the FOMEC press conference. So that affects us all day, because it means that anyone in that conference can make a statement anytime during the day. It's not a timed red flag news announcement. If it is a timed announcement, generally we'll avoid trading an hour either side of that news to let the market settle down again. Some people trade right up, and some people trade half an hour, just leave half an hour gap either side. So it really depends on your confidence and maturity and experience in trading. So stay away from any red flag news, generally anyway, outside of this kind of week, for an hour either side of an announcement on that particular currency. And then Friday, red flag news on Canadian dollar, which is New York session. The two pairs for the New York session are US dollar and Canadian dollar. That's my daughter calling me, which I'll just hang on a minute. Hello? Hello? Can't hear her. Hello? Oh, I'm just on a call. I'll be free in about half an hour. Okay, talk to you later. Bye. She's at uni. Well, that's another thing, isn't it? You know, it's weird being a student these days because they're all like under their little clusters in their houses. It's very strange, and most of it's being delivered online. So USD and Canadian dollar are the. Oh yeah, she likes me to. She's just said, can I summarize a text for her? So by the end of this 4-year period, I'm going to have a liberal arts degree because she keeps asking me to read all this stuff from whatever she's doing, shortcutting it. So USD and Canadian dollar are the two New York session major pairs. Canadian dollar is always affected by oil. So if there's terrorist explosions on tankers, if there's Arab meetings, if the price of oil is going up or down, etc., that will affect your trading on Canadian dollar. It's linked to that. So you can see on the Friday, again, non-farm payroll is usually our major monthly news announcement. It's the last Friday of every month, and depending on when the date falls, it will fall into the 3rd, 4th, 5th, 6th of the following month. And that's the unemployment figures on anything outside of agricultural. So normally none of us trade that day, or if we are, it will be early morning. So you have the most massive week next week. I mean, absolutely massive. So a lot of professional traders are not trading at all this week or next week. They've banked enough and they're just, not doing too, but you can use it to go on the top educator calls. I'm going to go through more of some of the HFX Academy. I've done all the Forex one, but, use it. Use it to ask questions, to learn, to say, can we do some trading together? Can we look at things together, to go on demo and trade during this? Because the market is also seasonal. So we're coming up to the winter season. So through to mid-December to about February, it's quite hard to squeeze the pips out. Spring, it takes off. Spring is beautiful and summer's nice, and the market has its cycles, and weekly it has its cycles. Tuesday, Wednesday, Thursdays are the best days to trade. You can go onto Google and you can look up the pippage against each pair. Pairs move differently. Faster pairs make bigger pips and move in different sessions. So understand the context of your trading and fit that in with your job or your free time with the family, and slot into the pairs that start in that session. So I trade early London, so I'll always look first at Euro USD, sometimes Swiss franc. I don't trade it a lot because it's a very slow pair. I just don't bother with it. So over time you'll reduce the number of pairs that you trade with. Chance, who we have learnt this off, Chance Gonham, he whips through every pair and he just clicks through 24, 30 pairs, boom, boom, boom. He says sometimes he has a quick look before he comes on with us, but I don't trade these days a lot of Forex crosses. So NZD, JPY, I probably wouldn't trade very much, for example. AN, CHF. I did look at USD CHF today. So let's come on to some of our trading for this week. If you've got any charts, you can always send them in anonymously. I'll crop it. You don't have to have your name mentioned. If you want us to look at what could we have done better, and how it played out, then please feel free. Just shut some of these other windows. So I'm going to come on first of all to Euro USD, sorry, Euro NZD. Now there is a currency speed pairs. This was my old notes from chart. Everything's from Chance that I've learned on this strategy, that we've learned on this strategy. He's the only one that does this strategy. It's a hybrid. He learned it off Christopher Derrick. Mike Miles gave him quarter theory. One fantastic top trader. Obviously, he learnt directly off Christopher Terry on YouTube before the company had its own website, and there were under 1,000 people. He found what Christopher Terry was doing on YouTube. If you want that currency pair speed, we can send you that, because EN is there 5 pairs that move 10 out of 10. This is the only pair that Chance says he gets greedy on, and I just follow everything he says. So I love this pair equally. And this is the one where he will, try and stay in and get 50, 70 or more pips. And you can see this big move. Each of these dotted lines is quarter theory, orange dotted. We can go through that. That's 50 pip increments. So it's moved 50 pips in, and I'm going to put the replay button on a minute and talk you through a trade. It's moved 1 hour 43, and it's just coming up to doing 100 pips, which is like absolutely massive. So those two lines are similar to Bollinger Bands. These are called extensions or Fibonacci's. You might hear them called as, and they are the outer bit of any scan. So once a pair gets to this outer level, then usually it will ping it back into the scan, or if it's really on, on its 1,000 pip journey, because pairs will move. A major move is 1,000 pips, of which this is 50 pips. So again, these orange dotted lines are mathematically based support and resistance based on something called quarter theory. And the reason it's so powerful is, like, if you're going to meet a mate, Connor gave me this story and I thought it was a brilliant one. If you're going to meet a mate, you don't say, I'll meet you at 7:27, you'll say, I'll see you at 7:30. You'll round it up or down, and that's what bankers do. The market movers, they put all their stop losses, they're putting on huge lot sizes, and they're putting on like 250 pip stop losses. So their stop never ever commence the trade at this orange dotted line, because that's where the bankers, we're nipping in the gaps in their strategy, and this is where the bankers are settling up, and where they're putting their stop losses, and where they're moving the market to suck up liquidity, to hoover up people's stop losses and then crash the market to suck up some positions from below. That's called the banker's strategy. But we use this because we know that price will either break and retest and carry on at that level, like it did here. It's done a break and a retest off that quarter theory and carried on up, or it will do a rejection and decide. I mean, this is a fast pair, so this is something that might be a bit more than slippage. That's 17 pips. But if this is only about 6, 7, 10 pips, then that would be called slippage that side. In other words, it did not want to go down there. It rejected it and then wanted to carry on up. That's not the best example, but I'll find one if I can. And I'm going to take this Fibonacci off. We won't go into that today. But what we will do is go back to where this move started. These blue lines are my lines that I put on. You don't have to put these on. It's just the way I like to work. I'm just going to remove the alert. So let's go. Now, the other thing is New York is known. This is blue, my blue. This is the PC FX sessions timer. I like to look visually to see where the crossover of a session is. So yellow is London and blue is New York. Generally, on any pair, whatever happens in London, yellow, green's Tokyo, you'll get a fake out. Tokyo's the slowest moving session, and it generally only moves about 20 to 50 pips, and then it will start to break out as it comes up to the open of London. And then whatever happens in London on any pair will then have a consolidation period, which is about here, and it's called the crossover. And New York generally moves between 2 to 4 p.m. UK time. And the reason I know that is because that used to be my hourly slot for live trading for about 6 months. So it was always looking at setups. And sometimes I used to forget that a price generally would reverse. Just if your mind wanders when you're trading, that's why it's best to do it in just like hourly slots and stay. Making your money out of trading is not about working hard, and it's not about long hours. You'll make less money the longer you stay on the charts. It's about intense focus when you feel up for it, when you're in the best mood, when you feel like you're going to dominate the sports field and you think, right, I'm really going to get this today. You've got to be in that kind of mood. And it's about more intense focus for less time. And if you find your mind wandering and think, why did I make that mistake? Why was I distracted? Then it's a weird thing the market does to you. You start to see things that aren't there, and you assume things that aren't there. So that's why we like to do it in just like hourly slots, or an hour and a half maybe, or you could do 1 2-hour slot and then, leave it alone and work to your percentages. So you'll generally get a sort of consolidation period in the crossover as the brokers cross. And then sure enough, you can see New York has reversed the move. There's this W, as Oren Wright says, M's and W's have bought me BMWs, and there's a nice W there, and it's gone up to the buy side. So I'll take this back to, I'll take my lines off just so it's cleaner. And that's the other thing, clean up your charts as you go along, keep it as clean as possible, keep your lines in the same colors, preferably the same as chances on channel 20, because sometimes he asks us to send charts in and then he can be looking at the same thing you're looking at and understand your charts. And that's what we're paying our money for, to learn off these top guys. So let me put the replay button on, and I'm going to put it back at the start of London, and I'll just magnify it. So this white line, this white line here, I'll change this to green. I usually have them in white, but I'll change it to green. Is a trend line, because that's one of our confirmations. We have 4 confirmations. There's a video about it on Chance's channel. The 4 confirmations are must have a pitchfork touch, and then the 3 confirmations for a trade, minimum of 3. You must have, it's mandatory, a pitchfork touch. If price is not touching a pitchfork, and we don't trade the outer one, by the way, you don't want to be caught in that bit. You must have a pitchfork touch, because you're using that as your boomerang for your best chance of price punching off it and giving you that 20 pips that you want. And then you want a break and a retest of the pitchfork. You want the 62 EMA. Crossing above means a buy, crossing below the blue, and we'll talk it through as we go, means a sell. A 1 minute trend line break and retest to the other side, or you want a Fibonacci touch. I won't go into that today, it's a bit more advanced. But the ones we use are the 88.6, which gives you the biggest, longest move. It's what we call the long extension leg off that. It forms the C to D. That's your coming off your 88.6 or the 61.8. Those are the 2 that we use, but we can go through that another time. So let's see what price is doing, what it did. Okay. So we're just coming up to the open of London, and you can see big candle, called an engulfing candle, coming down below the 62. So at this point, I'm thinking, oh, okay, I haven't got a trade here yet because I haven't got a pitchfork touch. It's also sandwiched between here and quarter theory. I would not want to be caught in a trade as it's going through here. If I was thinking about this for a sell, which I'm starting to think about because I can see it's come up in Tokyo and it's coming down, and Tokyo doesn't work the same as New York. It's not a reversal. Tokyo is a slow, small pip range session. Your second biggest session is New York. Your biggest session is London. So I'm starting to think, oh, okay, what have I got here? I haven't got anything here till the pitchfork comes down nearer to the quarter theory, because this is a fast pair. I can use a 15 pip stop loss, but I can see anyway that's more than 15 pips. Oh, well, it is 15 pips, but I wouldn't have 14.6, but I wouldn't be able to cover my pitchfork. And you want your slider, this long and short position, long for a buy, short for a sell. You want your 3 confirmations, I'll show you this in a minute, to be in the red box of your slider bar. And those 3 confirmations are what's going to help give you the best chance of not being taken out the trade on your stop loss, because they are major levels and price has to work very hard to break through that level. So it's and price will always want to come back to stay along the 62. It's its natural resting position, this orange line, which is our current momentum. The orange line is our current momentum in the market. That tells you what price is doing. So I'm thinking, okay, it's now resisted the quarter theory. It can't break back above. There's some stalling out. So I'm thinking, oh, okay, price wants to drop. that doesn't really help me on a trade yet. So we set alerts, by the way. We're not sitting looking at this all the time. We will take the chart, set an alert, and wait for it to reach the point at which we want to look at it for a trade, and then go off and do, make our breakfast, watch some self-development, do some of your gaming if you're on your PS4, whatever you want to do. Have your phone alerts set, but this strategy is best worked on a computer. Chance will always come back and do his trading on the computer, but this is like the dashboard driving the car, and then this is the motor. He will take the trade and run the trade on the phone. You can look at TradingView. That the app is very good on the phone, and set your alerts. So price now has dropped. Price has dropped, but I still didn't have any trade here. I can't put a Fibonacci on. I haven't got pitchfork touch anyway. It's come under the 62, and that's crossing down. This is the 15-minute line. So that's how price would look as if we'd moved to the longer term time frame on the 15-minute. So I know once my 1-minute current time price moves down below this blue line that it's going to sell, because this is the current momentum in the market, and that's all this blue line is. It saves us switching back and forth looking at what price is doing on the longer time frame, the 15-minute. And here we are. And remember, this is a weird week in the market because the market's all tightened up this week, so very weird today trading, comparatively speaking. So we're now UK time at 8:25. So it's just coming alive in London. So I'm thinking, oh, this is looking good. Now this is the point at which I'm very interested, because I've got a pitchfork touch. I'm getting a break and a retest, and we like 10 pips if we can get it, 8 to 10 pips. So it's done 8.6. Break and retest of the pitchfork, and then if possibly, unless there's a big strong momentum, I'll want a break and a retest of the pitchfork, and then in for the sell. Now, why am I looking at a sell, not a buy? Because I've got the orange cross the blue, and that's a big tick in the box for one of my confirmations. And we have got a confirmation checklist. I did have some printed off up here, but I've been tidying up for the week, so I can't show it on the camera. So what I do is I print them off and I tick them as I go along, and I mark up the trade and I back test. If you just want to print one off and you haven't got a laminator, you can just stick it in a freezer bag and use one of those wipeable pens with a cloth and just reuse it. But it is incredibly useful. It shows you what you've done with the trade, why and how you could have done better, and what confirmations you used, and it helps stop your mind wandering. So I'm very interested in this. Now, this isn't unusual for a fast pair like EN to move back that number of pips. It's rejected off quarter theory. It's come back up to my 1-minute trend line, so it's moved 20 pips back fairly quickly, and it's above the 62. And I can't remember now what it does before the trade gets set up, but we'll see what happens now. Well, it's held by my 1-minute trend line. You need at least 2, preferably more. Get as many touches as you can on your trend lines. A break and a retest of the trend line. I'm following a downward trend here, but if I put a trend line up there and looked at a break and a retest, that'd be one of my confirmations the other way. So I'm still very interested in this for sell. I've got a nice break and a retest. If it comes below this quarter theory there, and the 62 is going to come down into my orange slider bar, this short position here, remember, which I'll show, which will come up in a minute, then that's all you can do. That you've done the best you can possibly do, followed your confirmations, trusted your these major levels, the system that's been set up by a top educator, that's an ex-young man, fabulous guy, that was an $8 an hour fry cook, who sat and learnt this and did this in his car after the night shift, sat at the back of the class in college. He didn't want to be in college. He didn't want to be a $40,000 a year farmer's assistant the rest of his life. And 23, he's been doing years old, I think 23, 24, 6 years he's been doing this. and he is now, you know, a massive six-figure earner. They're not allowed to tell us the figures. I don't think he's multi-million-dollar, because he's literally built this up from $40. You know, just the most phenomenal young man. He and his wife Samantha, just fantastic people. They're such an inspiration. And all his friends hated him for doing it and said, "Oh, bro, you've given us up. You're not coming down the bar. You know, you'll never make it. You're stupid. You'll never do this." I mean, he's just fabulous. So here we are, and here it comes. So we've got a lovely break and a retest and a touch on the 62, and there it's back on the pitchfork. So this is giving me everything that we need. And I saw Connor posted it this morning, Euro NZD and GBP JPY, which we'll look at next, which moved again. It's equally fast. It's a nice pair to trade, but we missed the move on that. That moved quicker, and it didn't give us the same break and retest. So you'll learn these nuances. I'll show you GBP JPY next. So here we are. It's now giving us the break and the retest on the quarter theory. You've got the 62 acting as a ceiling. This is a remember I said this quarter theory is a mathematically based line of support and resistance, support being the floor, resistance being a ceiling. This 62 EMA on any time frame, we're using it on the 1 minute, is measuring the previous 62 candles, and it's called an exponential moving average because it's weighted towards the most recent price. So if it's above price, it is literally pushing price down and telling you to sell. And obviously vice versa if you're looking at a buy. So let's carry on with this. Is it going to give us, so there is the break and the retest back to quarter theory, and the 62 is holding it, and you can see those two candles there. So there's your entry. Some of us got in here a bit earlier because we saw this momentum, but technically, really, the mantra is on this strategy, no retest, no entry. And that's from Christopher Derrick, who is ex-army. Not that that's really got anything to do with it. I suppose it shows good discipline and stuff, but you know, I'm going to win kind of mentality. But he is like multi-million-dollar trader, been in IM for, you know, a long time. He is one of Chance's mentors, and he always says no retest, which is this. There's your break. No retest, no entry. No retest, no entry. Because that's price saying I'm testing these major levels. I can't break back up through. This is protecting you from being taken out for a loss. That's what this red box is. And you're safe then, as you can be. You can only do the best you can. Sometimes trades don't give you the setup straight away. You might have to get in 1, 2, maybe the third time, and then price will go. And sometimes price just turns on you, which is why we like working with a small stop loss. I've never, ever, ever worked with 20, 30, 40, 50 pip stop losses. My finances and my account would never have let me survive. Once I came across this strategy with a 10 to 15 pip stop loss, I thought I can mentally cope with that at 2% risk. I know I can do demo, small lot sizes, you know, penny lot sizes to get my confidence on, getting the computer brain. It's like learning to drive, getting the computer brain going, oh, I've seen a winning setup. I'm going to press the button because I've ticked my list and I've got my confirmations. So get yourself and your ego out the way, because I used to think, well, surely this little orange line can't work. Well, that's only your ego. Listen to all these big educators. They know it works. That's why they brought us this strategy. They wouldn't be on that TV, 120 of them, you know, taking live trades. You know, it's phenomenal the way they can do that while they're actually live on with us. So having said that, a lot of pairs, as I've said to you, have been ranging, accumulation, consolidation are the words we use, which means that it's because of the elections, all that red news next week. They're not making full moves, even something like EN. So I didn't do particularly well on this because I came in late. I was actually having a lie in, and I saw Connor's set up, and because I like EN, I thought I'll get out of bed for that. And I came in late, and I was up 17, 18 pips, and I closed out far less. I did better on USD Chef, and I wasn't going to trade at all today, and I'm not trading very much next week because of everything we've just discussed. Charlie did 27 pips, so he would have been in right up here off that quarter theory. Charlie Brown So he did 27. So he was in after his spread and commission, broker spread and commission, he would have been in here. And he got 27 pips, which is absolutely excellent, because normally a pair like EN in normal market times, as Chance says, you don't get into EN to make 13, 20 pips, you get into EN to make 50 pips, GCAD 50 pips. The 5 fastest pairs are 10 out of 10 are Euro AUD, Euro NZD, GBP CAD, GBP GN, and GBP AUD. Those are your 5 10 out of 10s. GN is the wildest, wackiest pair in the market. It bites you like crazy. You know, please don't trade it, basically. We do trade it because we're a bit like moths around the candlelight. We can't help ourselves sometimes, because it'll just give you 120 pips, but equally it'll just whack you out and you can't quite see what's happened. It is like the Wild West, that pair. So let's see what happens. So we're in the trade now. So you're thinking, oh shit, you know, what have I done? Because it's come up here, but it's held by the pitchfork. Remember, you had your 3 confirmations. You had the pitchfork touch, the break and the retest, quarter theory. You've got your 1 minute trend line. You've got your 62 EMA. So you've got the break, you've got the pitchfork touch, the quarter theory, the break and retest, and the 62 EMA, all sitting in your red zone, which is what you want. You want them tight up in your red zone so that it's as close to when you get in, not sitting far back. Because if the break and retest is an hour or 2 further back, or 3 hours further back, that means it's a longer, slower moving move. So it means, and we don't sit in trades for, the longest we sit in trades is like 45 minutes, maybe up to 4 hours. And that's what Chance says. We don't sit in consolidation. You don't get that on the 1 minute. And we are not in trades 4, 5, 6 hours, never in trades overnight, never in trades over the weekend. We're not swing traders, and we're not scalpers in for just a minute taking 3 to 5 pips. We are a hybrid strategy, remember, hourly time frame analysis, but on a 1 minute entry to give us that small stop loss. This same pattern, and we'll go through it another time, is exactly the same pattern that you will see repeated on the 15 minute, the hourly, the 4 hourly. It's just we're looking at more wrinkles. We're looking at all the candles. There's 60 candles make up, obviously, the 1 hourly candle. We're looking at all 60 candles, and that's the power of the strategy. But you'll get, that'll sink in, and you'll get to know that as we go along more, as you just learn more and more about it. So here we are. There's the trade. It's tested again, but it's held nicely, and it's come back. So you're still in the trade, remember, because, I did increase the stop loss on this actually, which I don't do very often. I did put it up to 19 because I was in late, which was a bit naughty of me. But normally you would have been in, let's get rid of that. You would have been in, sorry, that's the only way I know how to get rid of it when it happens like that. Just get rid of this. Someone like Charlie was in further up here. You'd have 15 pips on those 5 fast pairs for a 20 pip gain. So if you look here, you've got everything in your orange, your red stop loss area. That's where you want your confirmations. That's the power you have. So don't get into it if you're 62 still up here above the pitchfork, you want it to catch up. For example, and these are our favorite trades where we can take them where the quarter theory sits near a pitchfork, and we can cover it with our stop loss. So price now working its way down. I can see an old pitchfork sat underneath there at about 17 pips. And then now at this point, I was up about 18 pips. Remember, I'd got in late. So actually, if you're new to this strategy, I'm showing you one where I didn't do as well as I could. I've ended up today with about 2%. Each day we aim for 5%, but on this strategy, or a lot of these forex strategies, that's quite tough to achieve. 5% is really stretching it. We'll aim for 2 to 3%. So I've ended up okay today on a day I wasn't trading. And one powerful thing that we do on this strategy, I put that one of my blue lines back on. I haven't got time. We won't go into it today, but we aim to get a 1 pip stop profit, it's called, 1 pip stop profit after pair has hit 10 pips, 1-to-1 ratio. On this, you wait till it's hit 15 pips because it's a faster pair, and then you aim to get your 1 pip stop profit in, which means even if price reverses on you, President Trump dropped dead, God forbid. I mean, not getting into politics, just I wouldn't, it's not a nice thing to say about anyone. The euro went up, COVID was some, vaccines announced on COVID. That's a better example. The euro goes up because we're under lockdown at the moment here in France. Suddenly shoots straight up. I know I'm not going to lose any money. Remember, this is your job. You want to make money out of this. This isn't an ATM. It's not the horses. It's not a casino. This is riches for a generation. This is you getting out of your job. This is you and your pension fund. This is you and your kids. This is you paying your mortgage off. So this is your job. You don't want to be giving money back to the brokers and the banks. They don't need any more of our money. So as soon as you can get that 1 pip in there, and there's no shame saying, oh, I didn't get my 20 pips, that at least you haven't given money back. I once said to Chance, I said, how do I compound my account? You know what his answer was? He just said, well, just don't lose. Just don't lose. So if you can get yourself, when you're learning, to a position where you just don't lose, and then build on that. So 5 pips is 1% profit you will have made, 10 pips is 2%, and we're aiming for 4% with the 20 pips. Keep going like that, follow the system. You'll get everything out of this and more that you will ever need in life. So let's see what happened on the rest of the trade. So by this time, I've decided to get out the trade, and there are 2 reasons why. Number one, as you know, I was in late, so this is a great example to you of why we only pick the best trades. I missed it slightly, and I thought, well, I'll still get in, but because the markets aren't moving as fast as they normally do, and EN didn't make a full move, normally I probably would have been all right. So my timing and judgment and my statistics were all slightly off. So some of our criteria for getting out of a trade is if it crosses back above the 62 and if it breaks our 1-minute trend line. As it did that, I thought, you know what, I'm getting out of this trade, because I'd looked at this full scan before and I thought it's not going to make a full move. And then look, oh boy, and then look what happened with it. So I'd got out now, I'm not in it anymore. And look what it did. It made its move. It was just slower doing it. It did it in New York. Bang. So it did 50 pips, which is good old EN. That's what you'd expect. And then this is what we would call a stack in. Chance loves these. We haven't got time to go into what they are today, but they are in effect taking a second position for a risk-free trade. So you're still running your first trade down. Now, because you've done 50 pips, that is 5-to-1, which is phenomenal return. You've done 5-to-1, 50. So you've done about 2 and 40. You've done 2.5 days trading, 25 pips a day, about 2 days trading in one. So, fantastic. You certainly needn't be doing any more today if you'd stayed in down to there. So I was salty, as Chance would say, by the time I saw this. Now, what Chance would be thinking of here is closing his trade out at the 50 pips and then getting into this for a risk-free trade and just letting it run to see, and then pulling this down, pulling his stop profit down on his MT4 so that he could be picking up. Let's see how many more pips he could have picked up. Well, that would have taken you out, actually, so it wouldn't have worked on this occasion working like that. But there are other occasions where it works beautifully, and sometimes we stack in a third time, a little bit more advanced again, but incredibly powerful. So that now finished its move. So actually on that trade, it only went off that pitchfork 15 pips, and I can see an old pitchfork there that it's wicked off. So that was today's EN, and then it's gone up, back up 50, back up the other way 100, pips, which I'm quite surprised about because the euro's gone into lockdown. And some of the, if you read the political news, FX Streets, I try not to read too much of it because I find I'm better just looking at technical analysis and not worrying about it too much. But it said, you know, it's pressure on the euro and the GBP because of COVID uncertainty. But look at that move. You could have got it all the way down. Then you would have seen it had come back up. It didn't give you a break and a retest off the pitchfork. Let me get rid of that. It gave you a break and a retest back to the quarter theory and back to the 62. So there was another entry there, depending on your confidence, not as classical in terms of, but you had two strong upward momentum candles there. There to there was 12 pips. But whilst it's above the 62, you're safe to stay in it. You could have drawn a 1 minute trend line up there. And if you'd done that, if you'd drawn that 1 minute trend line, always anchor it, always try and anchor it somewhere. So if you, and you want a minimum of 2 touches. So, so I've got 1, 2, 3, 4, 5, I've got 6. So whilst price stays above the 1 minute trend in the 62, you're good to stay in that trade. If you're thinking, well, I don't know when to get out of the trade, as soon as you see it dropping like that, like it is there, and if you had been in that, and if you had taken, let's see, if you'd stayed in, that's a beautiful trade. But hang on, let me just measure how long that took as well. So off that 62 there, up to there, another 87, call it 85 pips in less than 2 hours, where a pip can be worth $1, $10 for a full lot size. You've got micro, mini, and full lot sizes. I mean, you know, and you've just been in on the sell. You know, that's a fabulous. So why would you not want to just close out if you've got another 4-to-1 risk to reward there? You know, don't be greedy. It's wicked twice off the pitchfork. You've just had a phenomenal run, and then sure enough, you can see it drops back down. So if you were trying to be even greedier, then you would have lost back 23 pips or so. And who wants to sit on the computer all day? I don't. So 1 hour 45 of 85, 87 pips. Thank you very much. And you've had all those pips on the way down. So I'll just show you before we go. I'll look at the chat, see if there are any questions. Just show you briefly, not to this extent, the GJ trade, because this really was sort of like trade of the day. So this is off for our hourly scan. And this is why we save them onto TradingView. Connor and I can take you through how to draw a scan over, copy and paste, join the dots. So, and then lock them on, lock them on. Then they can't glitch on you, because you need to check your pitchforks if they've glitched. You'll know this if you're working in trades. You know, you've got to have your angles straight. So it's the same thing. If your pitchforks are off by 1 or 2 pips when you put them on, it's a bit fiddly to draw them, because you've got to magnify it. You've got to make sure it's on the lowest or highest of a one minute candle. But once they're locked on, if they're out a bit, then over a period of weeks and months, you'll be 50, 60 pips off on the angle, rendering, you know, null and void to trade. That's why it's worth doing the fiddly bit at the beginning. So this is what we were trading off, with a D point taken off that scanner, 30th of October, 5 a.m. UK time. So it's a buy scan, because it's always off the D point. So this is a buy scan, and the scan itself, C to D, is 154 pips. So you've got 35 to 40 pips per leg. So you know where you are on your ratios. So come down to the 1 minute. And as I say, Connor had the setup and told us about it in the chat, but it had moved too fast for us. It was a slightly different move. So this is our area of interest. You can see the pitchfork, the 62, and that quarter theory. It was absolutely fabulous move, and it did that 50 pips, and then it still went on up to that next pitchfork. And I just love the power of the strategy. It's just amazing. You can look back over the months, and to the pip, you can see how it touches the pitchforks. and that's because it's based on the maths. So if we just very quickly finish by replaying this one. So where's my replay button? So open of London. So it's come off the D point. We love it when it does a break and a retest of the D point. It doesn't do that. And on this, just say to yourself, what am I seeing? It's the same thing over and over again. It actually is not complicated. Just break it down. Like when you're measuring up, if you are in trades, measuring up how, and I wouldn't even know where to start, but you can look at a room, you can size it up, you can write the calculations down, you can work out the quantity and the materials and the time. It's the same breaking down of have I got a break and a retest? If it's I need to wait, it's a buy scan, I need to wait for it to be above the 62 EMA before I'd even think about getting into a trade, because we only take buys up to the median, the midpoint of the pitchforks on the scan, which is this, which is why we put a dotted line there, so our brain doesn't have to think. That's why I draw the lines the same color, so that consciously I don't have to think about any of this stuff, because I know that the solid line means once prices hit the median, I can take sells off it. So until that point, I'm only interested in a buy. So you can disqualify trades. So you say, all right, it didn't give me a break and a retest. Anyway, it's under the 62. It's coming above quarter theory and strong momentum candles. Oh, good, it's starting to work its way up in the scan for me. Where am I going to make a trade? Oh, well, I can't now make a trade till it hits the pitchfork. Okay, so I know what I'm looking for. I'm certainly not going to sit here for hours and wait looking for it. You know, you don't want to be doing that. What you do is draw a trend line 2 to 3 pips under your pitchfork, set an alarm. If you've got the free version, then I think you can get call alert, or there's a free app, call app, alert app, I've forgotten the name of it, to get an alarm on your phone, and then you just come back and look at it when you know you've got a good setup. And again, when you come back to the chart to look at it, you're not thinking, oh, is this a good setup or not? You know you've set the alarm for a reason, that you know that was a point of interest because you've done this calculation, and do this kind of setup 2 to 3 hours before or the night before on your charts, before the day when you know you're going to be going in for your hours trading. So we'll just play this one out, and then any questions I'll look at, and then we'll call it a day for today. So price is coming up. It's going to hit my alarm, and it moves fast, doesn't it? So, but I'm thinking, I've got the pitchfork touch. It's above the 62. I've got a break and a retest. Great. Is this a trade? And it's done 9.8. It's doing the 10 pips. The answer is no, because you've got a brick wall sitting here, or brick ceiling. You've got a major level sat there, which is only 12 pips away. So you can say to yourself, okay, I'll grab 10 pips here. But remember, if you're always grabbing 1-to-1, 10 pip stop, your stop loss is your profit regulator. Your entry determines your loss. So if you're saying to yourself, I've got a 10 pip stop loss and I can make 10 pips in this gap, then if you're always doing 1-to-1, you're never going to be compounding your account to get the growth financially that you want. In fact, chance is even stricter. He says to himself, if he closes out at anything less than 20 pips, he calls that sludge. He doesn't even count it on his account. So that's why we don't just go grabbing at pips. Oh, I made 5 pips here. Although we like the 5 pips, if price reverses on you, it's best for your time and your work to come away with 1%, i.e. 5 pips. Because if you can just do 5%, 5 pips, 1% extra over 100 trades over a year, that's another 100% on your account. So, you know, this is the power of it. So I'm saying to myself, in fact, I'll draw it on long position for a buy. I'd be drawing it on my quarter theory, because I know price could sidle along in here forever if it wanted to, and I don't want to get caught in that. So the GBP JPY would usually be a 10 pip stop loss. So that's the only other thing. Ideally, you'd have to increase your stop loss, which isn't really best practice, because you would want to be covered there, and you want your 62 pitchfork and quarter theory between you and the trade. I then always like to come here and I put it in here, 135.000. Asian pairs have a different, they have four, they move to 4 places, I think it is. Profit level, I always do the same thing. I put it at the 1 to 2, and then there's a 10 pip stop loss. Whoops, not that. 10 pips. So what I don't like about getting into this is that makes me a bit underconfident, a bit nervous, because it's not covering me. I like 2 barriers if I'm going to get in up here off a break and a retest, just in case price reverses on me. So I'd probably look for another setup. I know I didn't on EN, but ideally I would do that rather than increase my stop loss. But otherwise I'd have it about 2 pips the other side at 14. But then, you know, you've lost another 4 pips if that does stop you out. So why would you want to get in a trade where you're increasing your risk when you can just leave it alone? Just look for the best quality trades. You don't need to be in trades all the time unless you're on demo and practicing. So it comes down to the 62, and it's got 1, 2, 3, 4, 5 rejections off it. That's nice. That says the 62 is holding it like a floor, it's supporting it. So again, just break down, analyze, say what you see. I often sit here talking out loud to myself, because that way, you know, and that's why we like to trade as a group, because we like to chat and say, you know, am I seeing the right thing here? Are you seeing what I'm seeing? Because it's a bit like driving when you've got blizzards and fogs. You can see strange things, especially if you sit and look at stuff too long. So it comes up, 62 is acting as a floor, it's supporting it. Price has come up very nicely. Now, we all missed this because it did something slightly different. It just decided to go fast, which was a bit weird, because they'd been saying that COVID had caused uncertainty across Euro and GBP pairs. So it's strange that the GBPs went up. So the other thing I do on my MT4, I've got it split into 8 windows, and I keep 4 GBP pairs on the 1 minute and 4 euros. And I like to very quickly go over there and see blues and reds, which are moving up, and what the SAR flip's doing, because you're correlating pairs. If GBPs are going up, you should expect the euros to be going down. And they have been doing weird things lately where they've both been moving in the same direction, which has been a bit confusing. So when I was looking at this, I was also flicking over. Obviously, it's a different time scale. We haven't got time to go through some of these others to see if the GBPs were going up on the other pairs. I was having a little quick flick through GCAD, GU, and I was also having a flick through Euro USD just to see at that time. Obviously, we're in New York now, but at that same time, just to see if the pairs were doing what I expected them to do. Sometimes they'll move at slightly different speeds, because Euro GBP is slower than Euro NZD. Euro GBP is moving at a 5 or a 6 comparatively, or maybe a bit slower. So what happened here? So again, it was held by the 62, but then what time is that? That's the half hour. I can't remember what it did. So didn't quite give you the move here. Now, you wouldn't have been in the trade, as I say. So again, I would have had alerts set, so I'm not in any trouble at the moment. I've got my alerts set just 2 to 3 pips onto the quarter theory. And it's starting again to give us that channel up, higher highs and higher lows. That's what we're looking for. And we do, on this strategy, we do use something called pivots, lazy man's high and low. So you can check here what's happening, because the market is always forming different channels. Again, we can go through that, what that is and how they work on different time frames. Chance has got some videos on it as well. And here's the move. And this is this beautiful move we just missed, because you can see it just shot up. So you've got the 62 came up. You had that lovely break and a retest of the pitchfork. You've got everything in your orange box. You've got your quarter theory, but what it didn't give you was a classic break and retest back to the quarter theory. But as Connor said this morning, and Chance often does it, he will enter a trade where he sees the feeling in the market and sees a strong momentum. So here at 10 o'clock my time, which is 9 a.m. London, There was a fake out to the downside in effect, and then the candles and the wicks always tell the story. A solid bottom. These are ordinary candles; they're not high Kanashi or anything. A blue buy candle, not so much engulfing sell candle, but it was bigger. But it did wick back. It did retrace back, and then it closed at the same. The buy candle opened at the same level, slightly above, that the green one closed at, and then that's what we call an engulfing candle. So strong momentum up. So if you had been clever, and not even clever, but quick and confident, it happened so fast, we were all like, well, what happened there? Then bang, you could have been in here, maybe at that level there, 135042. 135042. Why can't I see that? 135042. Could have got in it. Could have got in here. And this is why you want to. It's like learning to drive. You know, when we first learned to drive, we're thinking about changing the gear. We're thinking consciously about, you know, the accelerator, the clutch going down, and, you know, and all that good stuff. If you do 100 demo trades, bang, 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 it trains the computer brain on when to press the button. And then I bet now when you drive, you don't think about it, do you? You just think, oh, how did I get here? You just get in the car and I'm going to the supermarket. You don't even think about it. You're thinking about your shopping list, and you get to the same position with trading on this system, because it's the same thing over and over again. Where if I've been sat at the computer and I've been thinking about it and my brain had been engaged and I've been following this back from the D point and had my alert set and gone to get my coffee and put the TV on and, you know, daughter ringing and that kind of thing, as soon as the alert had gone off and I know what I'm looking for and I can see that momentum on the 62, it's coming above the blue line, I probably would have got in there because of these things that I've seen, and it's crossing the 15-minute and you've got that momentum. So, you know, a fabulous trade. And that took, for that 20 pips, say we didn't get in till there, so up to that pitchfork. That's what we love about this strategy. 30 minutes for 30 pips, a pip a minute, which could be worth $10 or more, depending on your account size, at 2%, because you do want to stick to the 2% for half an hour's work. And that's the power of it. So would we have got in at this next level? We know it does go up because we saw it earlier on, but let's just play it out. So it's still above the 62. Now, like me, I probably might have taken my money there, to be honest, because if it does that, number one, I get bored very quickly. I'm very impatient. So my personality, I'm not always very good at staying in trades for the longer term. That would have got me a bit nervous, and I thought, oh God, you know, and then I've lost all those pips back there. So I've just given up 15 pips, and then I've closed out having just got 15 pips. This discipline happens to us all, where we have to kind of try and learn how to stretch the trades out, because as we see, it stays above the 62 and then it makes its other move. It doesn't do a big break back. It's rejected off, as you can see, it's rejected off quarter theory. So again, if you were in this trade, that you might have thought, oh God, is it going to come and stick down here? I doubt I would have been in after that point. So either I would have quickly taken my money there, or if I had hung on, I would have then closed out at 15 pips and been not so happy. I doubt I would have still been in it. And, you know, I have to still learn that sort of thing. Even after all this time, I don't always get it right. And we see it takes, there's the rejections off what it's saying, buy me, and that's saying buy me. And I think it still carries on up, but maybe I'm wrong. But this next move took, that's another 45 minutes. Oh, maybe that was the end of the move then. I thought it had gone up more. Yeah. So again, I wouldn't have been in that trade, but it does it says buy me, but then it goes back down to the pitchfork. Maybe that's the weirdness of the markets at the moment. 1, 2, 3, 4, 5 minutes of rejections. The candles tell you the story, and look, it's off again. So would I have got in there? Would I have got in on this because it didn't give me? Would I have got in this? No, I wouldn't, because I would have been thinking to myself, I'm past the median. We're now in New York. Is it going to reverse on me? So I wouldn't have got into it. I didn't have a full retest back to the pitchfork. The 62 did that for me, but I know from looking at it earlier, I think it does go up quite a bit more. So it does go up to that pitchfork. So this might be just the weirdness of the markets. So there is just ranging, stuck in this cheese wedge. Absolutely hate it. That's why I don't like. That's why I don't ever get in trades where you're thinking, oh yeah, it's going up, because getting this trap, and you can be trapped in there forever, and then you end up just closing out with sludge or a couple of pips stop loss because you just get so, look at it, fed up with it. You're stuck in that for hours. Hideous, awful. And that's the end of it. So, and that's GJ. So again, we're in New York, out of session. GBP is London pair, JPY is an Asian pair. So I wouldn't be trading, and it's Friday afternoon, I wouldn't be trading that late anyway. So that's a run through how we break down a sell trade on EN, a fast pair. GJ is very popular with people as well, gives you good pips. At the beginning of London, you can get you 50, 60 pips on a pair like GJ, but Chance says about this pair, he says he only goes for the perfect setup. And I know it's not actually one of my favorite pairs, because several weeks ago I got bitten by it quite badly, and it's a bit like being bitten by a dog and then it comes up wagging its tail again, and you sort of think, well, just kind of treating it with caution. But so we all have our own psychology, because no pair is, apart from GN being the wildest in the market, no pair is any worse or any better. The market is the market. It's not trying to get you. The market is just there for us to use these tools to make our money and be in the right mood to do it. I think that's very important, the psychology. So I'll just see if there's any questions. I haven't got anything in the chat.